Good afternoon, everyone, and welcome to Stock Market Today on this Monday, where stocks came under pressure. We tried to rally at the open, but we rolled over and extra selling into the close on more tariff news. And here with me now to break down all the market action today is Justin Nielsen. Justin, what do you have for us today?
Yeah, well, we'll take a look at a few stocks. I'm going to kind of go with some themes. We had some breakouts, so we'll use progressive as an example of that. We had some reversals, and gosh, what did I end up with? There were so many to choose from. Dutch Brothers,
Palantir,
Dutch
right?
Bros as a reversal, and then
Yeah.
Palantir as kind of one that just kept on going down. So we, as ugly as the indexes looked, there was kind of a mixed market in some of the individual stocks. So we can talk
Yeah.
about that a little bit.
Yeah. And Justin, I think it also says something about the overall market if the standout stocks don't really come to mind,
Yeah,
right?
that's true.
Yeah.
Right.
All right. Well, we'll take a look at those stocks, but first, let's analyze the major indexes. The NASDAQ composite today down 1.2% by sessions closed, by far the hardest hit, and definitely looking weak here after closing below the 50-day line on Friday. Then the S&P 500 also a down day here, down about 0.5% by sessions closed, back below 6,000. That also coincides with the 50-day line. The Russell 2000 down 0.6% on the day after quite a weak Friday, closing below the 200-day line. So continuing to slide further. And then the Dow, perhaps, could you call it a bright spot of fractional gain after last week's declines? Still below the 50-day line. So not a whole lot of progress there, Justin. Let's start with the NASDAQ.
Yeah, so a few things that I mean, of course, that we just can't like right here. I mean, there was that reversal that happened last, or I guess a week and a half ago, and we kind of lost that area. We lost the 21-day on Friday. We lost the 50-day on Friday. There were all of these things where, again, when we were just hovering around 20,000, as ugly as the stocks looked, we were kind of saying the indexes don't look so bad. But sometimes it just takes a little bit of time and everything starts rolling over altogether.
Right.
So as much as, again, the indexes for both the S&P 500 and NASDAQ didn't look bad, we really started seeing that accelerate on Friday. And you and Mike, I think, did a great job on Friday kind of talking about, look, one of the things you have to be careful of is a Monday strength that starts the day and just can't hold. And that is exactly what happened. I mean, the NASDAQ was up over 0.5% at the open, 0.6%, but just couldn't hold it. Came in, looked like it was gonna, maybe try and get to positive territory again before it rolled over and accelerated selling into the close. So not a good look for the index. S&P 500 in a very similar boat. It also was up a little bit during the day, about 0.5%, closed not as bad, only down 0.5%, as you noted, but this was a close below the 50-day moving average line and 6,000, whereas those were some levels that were being held again to that same reversal day about a week and a half ago. So losing those areas, it's not a good look.
Yeah, absolutely. And so this is sort of the expectation after the weakness that we had on Friday, and then underneath the surface as well on Wednesday and even Tuesday, arguably for a number of growth stocks. This action today was pretty much what we were expecting to see, even though if you take that step back longer term, we all love leaning bullish, but just from a short term, more tactical perspective, it's time to get more defensive, right, Justin? And especially if individual stocks you own are triggering sell signals, you got to follow those rules.
Yeah, and I think that's where it really depends on what are you in, because let's take a quick look at RSP, because RSP was up today, not by much, but kind of like what you were
Hanging
saying
in
with the
there.
Dow Jones. Yeah, the Dow Jones Industrial Average. I mean, the kind of bright spot. So when you have the RSP, which is the equal weighted S&P 500, not coming in as much and kind of holding up a little bit better, it does tell you that it is mixed, that there's not everything completely breaking down. But this is where you have to look at your portfolio and take some cues from that. If you've got your individual stocks that are coming in hard, you don't want to lean on the indexes and say, oh, it's okay, the indexes are fine, unless that's what you have the majority of your money in. So you really have to be very cognizant of what's in your portfolio, because at the end of the day, that's where you're making your money or losing it.
Absolutely. Yeah. Let's look underneath the surface with FFTY, a measure of growth stocks off lows, but still down 1.7% on the day. So taking it on the chin there, an outsized decline there. And then ARKK, that's another area filled with a lot of growthy, high octane names, down 1.9% on the day. So just a little taste of what went on underneath the surface. And we'll take a look at more because, like you said, it's kind of a mixed bag in terms of what's breaking out. Clearly more the safer defensive type of area, but some growth names holding up reversals, as you mentioned, and other stocks continuing to break down from recent highs. Let's take a look at the 10-year treasury yield. Justin, what do you make of the bond market action?
This has been such kind of a mixed bag. It's one of those things where um, there have been times where the yields have been going up, and so has the market. And it's been kind of like, well, that's not the normal correlation you expect. And here we are, yields going down and the market's going down, not the correlation you'd expect. But look, it is what it is. You can't just say, well, there's a disconnect here. At the end of the day, price pays. When we're looking at the indexes, when you're looking at your individual stocks, that's what's going to matter the most. So as much as it might be great that the 10-year treasury yield is coming in for some of the small caps and things like that, it's certainly not having that much of an effect on stocks right now in terms of a good look for them. So to me, this is kind of a non-issue. I don't really care what the 10-year treasury yield is doing if it's not affecting my stocks in the right way.
Yeah, I think there was a time where you could point to this as the signal for, oh, this is why stocks were up or down on a given day. But there's a lot of cross currents right now. So many different headlines that people are looking to, and shifts in the market, and some rotations there that we are keeping an eye on. So speaking of, let's take a look at some of the breakout names today, starting with Progressive, which you highlighted on IBD Live this morning.
This was also our stock of the day. Aparna did a good job on kind of taking a look at this. Look, one of the things that was, speaking of breakouts, let's just go ahead and look at Berkshire Hathaway, BRKB, the B shares, which, that was a pretty strong breakout for Berkshire. You don't normally get 4% moves on Berkshire, and here we are with a very strong breakout. Of course, insurance is a big thing here, and we saw a lot of insurance names. KIE, the ETF we were also noting on IBD Live, doesn't have the greatest look, but again, Progressive, Berkshire, very different looks to these. And there were a whole host of them that we were going over on IBD Live. We also had Marsh McLennan, MMC, Bro, not to be confused with the coffee shop, but this is Brown and Brown. That was also kind of breaking out of a little tight area. So a lot of kind of setups in this space, but you got to look at the weekly chart on some of these. Progressive, I think, has had that benefit of this has made moves. You have seen times where the relative strength was outperforming here versus the S&P 500. But, it's also, you see a lot of tight areas. It can be like watching paint dry sometimes. But insurance certainly seems like it's not dead at this point. And recently, this last base, it did get supported. It's 200-day moving average line, or the 40-week moving average line if you're looking at the weekly chart. So that's interesting as well. Let's go ahead and just scroll down on the left-hand side, because we do on Market Surge do show 8 quarters of data here on both the earnings and the sales. And you can see that, look, those have been rising, some really strong double-digit sales growth going forward, but the earnings that did decelerate a little bit. Look, it's hard to keep triple-digit gains going for a long period of time. So 19% does stick out in terms of being a lot weaker in terms of growth than those triple-digit gains. But 19% is no slouch. So not too bad on the fundamental side there either.
And I like what you pointed out about the relative strength there. I think that's what definitely makes this one stand out to me versus the likes of MMC. Let's check out Bro as well. A little bit better, not quite as good as PGR. And then let's take a look at BRKB. Yeah, still, so the relative strength, it's looking at price performance versus the S&P 500. So if you're basically keeping pace with the S&P, why not just be in the S&P and not take on the single stock risk, right? So with Progressive, at least, hey, there's potentially a little bit of payoff here for taking on the single stock risk. Also, so this insurance area, these are more defensive, right? They're
Yeah.
steadier stocks, right? They aren't these volatile, high octane, risky type of plays here. So that's also um, kind of giving us some color as to what's going on underneath the hood of the market.
Absolutely. And the reality is, look, you pointed out some very long-term flat areas versus the S&P 500. That's one of the reasons why I tend to not be in insurance stocks for very long. They are
Yeah,
more of
swing
swing trades
trade.
for me.
Yeah.
As you said, it's kind of like where people hide, where if you want to still be invested, okay, this is a little bit slower. I'm not going to get hit as hard.
Mhm.
You can also look at the ATR, on a lot of these, the average true range, they don't tend to move as much. So in an environment like this, that's kind of nice, where you're having as opposed to a Palantir that's up at 7, having a progressive closer to 2 is a little bit easier to stomach in
Mhm.
terms of those daily moves.
Yeah, a bit more palatable there. Okay, moving on. Let's take a look at Bros coffee chain. And Starbucks was actually in the news today with some layoffs, I believe. But if you look at Dutch Bros here, we had that gap up on earnings a couple of trading sessions ago, essentially got hit on Friday with a lot of growth stocks. But where it closed today, I mean, it was down only 1% on the day, closed pretty high in the range there.
Yeah, so I was running a screen, and one of my favorite screens to run on days that are down is a screen that just looks at where stocks are closing. It just takes, okay, where's the high, where's the low, and what is the closing range? And it does this intraday on Market Surge. So you can see what stocks are closing in the upper part of their range versus the lower part of their range. And I'll do a sort. And I was pretty amazed at how the closing range on a lot of these stocks that I just owned a week ago was actually kind of looking pretty intriguing. And you know what? Before we even get to that, let's go back to FFTY for a second, because as ugly as FFTY looks, this actually had kind of a reversal right there at the 200-day moving average line, an upside reversal. I'm not saying go out and buy this right now. I think that there's some damage that it needs to recover from, but Bros does kind of show what was happening with some of these
Mhm.
stocks that we had in that were the high flyers, just last week. So here we are coming down to the 21-day moving average line. And I like to take a look at the weekly chart to really kind of put the perspective on this. We're still in the upper part of the range from that huge week that we had. So if we can kind of get support here, that's going to be something that's a little interesting to me, that if it can kind of hold here. So while I didn't get a position in Bros, I didn't reestablish my position, I should say, in Bros. I am watching this, and as I said, there was a whole host of things that I owned last week. Duolingo. Let's go to the daily, and you can see Duolingo had a nice reversal coming back, getting support at the top of its base. It does have earnings coming up.
Mhm.
Doximity, DOCS, that also, reversal at the 21-day moving average line. Cloudflare, that was another one that I owned that kind of came into that gap. Was Ended up being a little bit weaker. It was a little bit stronger before the selling at the end of the day. A whole host of things. Team, Roku, MNDY. There were a lot of reversals out there. So for as ugly as this day looked, and closing at the lows for so many of the indexes, there were some of these stocks, especially in the software space, that did seem to be getting some support levels. So that's something I want to certainly watch tomorrow.
Okay, so glimmers of hope. But Justin, is there anything that you would want to see from overall market conditions before taking action on any of these reversals that could develop into bounces? Or is it just a case by case basis?
Yeah, I mean, ideally for the indexes, I'd like to see some reversals there too.
Yeah.
Or at the very least, just stop going down, because that's the problem we have right now. Is they weren't going down, they weren't going down. Friday, hard hit, and then they kept on going. So if we can get them to just stop going down, I think that's going to be a good thing there.
Yeah. To make you feel a little bit more confident about dipping your toe back in the water.
And look, this is not an all or nothing kind
Mhm.
of game, right? You don't have to say, "Oh, there's these glimmers of hope, so let me bet the farm." It can be, let's start slow, start small. Again, with
Mhm.
some of these that are showing either breakouts with some of the lower ATRs, if you're going to do some of the higher ATR stocks, the ones that move a lot more, then I like to stick with reversals because there's a line in the sand where I very easily know when I'm wrong and I can cut my loss very quickly.
Right. And I think it also depends on, your trading style and time frame where, someone like me, where I see this, hey, maybe I want to see just a little bit more development over the next couple of days or weeks versus, trying to get a bounce right here off of the 50-day line, or sorry, the 21-day line. But we'll
Yeah.
have to see how
Yeah.
some of these pullbacks develop. Will they form bases? Like you said, can they stop going down? Can they form bases? Can they flash those early entries? So it'll be interesting to see how this week plays out, especially with NVIDIA earnings midway through the week
Yeah.
and then some more economic news
Yeah,
on
let's
Friday.
not forget about some of these risk factors coming up. So, Allie, I am not downplaying your strategy at all because I think it's a good one. There's no problem waiting for some more evidence. One reversal day does not a trend make. It's just, again, as you said, the glimmer of hope, but
Mhm.
you don't need to go all in, and you
Yeah.
certainly don't need to go heavy.
But I think that also shows you the power of screening though, right? Because you could be in a
Yeah.
very bearish mindset, but you have to be open to the fact that, hey, maybe stocks are trying to find some support here and could bounce and we could turn. So I do think it's very important. So this really illustrates that. Thank you,
N-
Justin.
No matter how ugly things get, you always want to keep your watch list fresh.
You betcha. Things can turn so quickly. And let's take a look at Palantir. Full disclosure, I do own this, but I still have more than a 100% gain, even with the recent downdraft, and I've been selling. So I now have 50% of my position. I cut another 25% today with the decline of 10.5%. I was trying to see if it could find some support intraday. It tried to, then rolled like a lot of stuff. So undercutting that round number at 100, the 21-day line, and that attempted a reversal last
Yeah.
Thursday. So breaking a lot of levels here. It is above the 50-day, approaching the 10-week line. But so far, this is a pretty severe decline, severe pullback versus the last one. So some warning signs here potentially.
Yeah, and again, this really kind of highlights how where you got in kind of, can really have a
Yeah.
lot of sway over where you get out. I was looking at a decent gain myself. I got out the remainder of my position on Thursday when we crossed below 100, but I think I was looking at a little bit north of a 50% gain, not a 100% gain. So I was like,
Mhm.
okay, you know what? I want to make sure I retain that. I
Right.
wasn't holding on to it as long as you had, Allie. So, when you've got more cushion, and the reality is, I mean, how far off on the weekly chart? If you go to the weekly chart, it'll tell you how far off your high you are. Okay,
Yeah.
so in a very short period of time, we've already gone down 25%. So
Yeah.
again, that's more a reflection again of one of these high ATR stocks.
Mhm.
I think it's over 7 on Palantir here. So look,
Mhm.
if you have some movements of 7% in a day, and you're ending at the bottom of the day, you just have to realize how quickly some of
Yep.
these things can come in. But more importantly, I think this again stresses kind of the difference that's out there. We looked at some breakouts, we looked at some reversals, and now Palantir is kind of a very different look. So when you're looking through, and this is where screening and looking through a lot of
Mhm.
charts can give you a good sense of what's happening out there. Take a look and say, okay, am I seeing more Palantirs out there, more closing at the lows? Or am I seeing more of the reversals closing at the highs, some breakouts? And what areas am I seeing those in? Because that can tell you a lot. Sometimes there's a news thing, which, as we talked about, this had kind of the double whammy of not only the Department of Defense was, saying that there's probably going to be cuts, 8% roughly, but you also had the CEO kind of restructuring his trading plan, kind of almost, the news kind of came out almost at the same time. So you did have a double whammy here. But again, just when you're looking through the market, get a sense of what the stocks are doing, not just the indexes, because that can give you a lot of kind of detail and color of where the moves are holding up better, where the moves are breaking down, and where things should be watched very closely for opportunities. And of course, top of mind is always going to be your own portfolio. So you're protecting your capital.
Absolutely. And while I still think that the story with Palantir and the fundamentals are very compelling, if it continues to go down, I will continue to sell. It looks like it needs to form a new base. And so I think for traders out there who are starting to look at charts in the way that we do as active traders following trends and momentum, this is not, if you have conviction in something, this is not the position where you buy it
Yes.
because it's on sale, right? We want to see some support. We want to see a turn of the direction here, so that way we have more of the odds that it's going to resume its uptrend.
Mhm. Or even worse, you don't want to be buying these extended stocks. If you were looking at
That
Palantir at
too.
120 and you're like, oh my gosh, this has gone up so much, I need to be a part of it. That can be where things are a real disaster. Allie, you have sat through a 25% correction in this.
Right.
That move from 84 to 80, 84.80 down to 63.40, that was about 25%. Got
Right.
support right there at the 50-day moving average line, came back.
And
So
then doubled from
how
there.
to hold through something like
Yeah.
that.
Right. So we'll see if it can do something similar this time around. It does feel a little bit more severe
A little
in
quicker.
the pace, the rapid descent.
Yeah. Yeah.
So we'll see what happens here.
Mhm.
Okay, let's. You wanted to take a look just super briefly at two others. Broadcom closing at the lows of the day, down almost 5%. So continuing to sell off. VIST as well, another one closing near the lows. I'm curious about two that we looked at a lot last week. Kava, okay, this one closed a little bit off the lows, still down 3.4% for the day. And Axon was sort of the poster child for a blow up
Yeah.
last week, closing close to the lows there as well.
Yeah. So again, there's plenty in each category right now. So I think what people should do in terms of their homework is kind of go through some of your screens and see, are you seeing more breakouts? Are you seeing more reversals? Or are you seeing more of these failures where you're undercutting lows? And then of course there's going to be kind of the ones that are a little bit mixed. They're not going down
Mhm.
that much. They're not going up. And they're a little bit more neutral. But you certainly want to be building your watch list off the reversals and the breakouts.
Absolutely. And like you said, if you want to play, keep those risk management rules in mind, play smaller. And then also, there's nothing wrong with staying on the sidelines as well,
Mhm.
waiting for those A plus setups and for the market wins to turn more in our favor. So that's sort of the strategy that I'm taking as more of a position trader, but swing traders who are super nimble and great about sizing and timing their entries and exits, just so it just all comes down to what your style is.
Absolutely. And sometimes you might have a mixed. I have some
A
accounts
little bit
that
of both.
I'm a little bit more of a position trader in, and some that are more of a swing trade. So again, make sure you're not changing the rules on yourself to justify
Yeah.
not taking a loss on things. That's the big thing.
Yeah. Well said. All right. Well, thank you so much, Justin. We appreciate it. And thanks so much to everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream. We will see you there. And then we'll also see you right back here tomorrow after the close.